Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market attempted a new high and found responsive sellers on the push up towards the 86 to 87 area, with the overnight high being 87.75. And on the downside, we've seen the market balance above 78.5 to 80.5. So heading into the open, we're going to be using that 78.5 to 80.5 area as the pre-market support, and it can also be viewed as the micro bull bear zone. So if the market's holding above 78.5 to 80.5, then it indicates that the buy side is still in control, and that opens the door for a retest of 86 to 87, and possibly a breakout and a test of 90 to 92, and potentially 95 to 98 and 01 to 03. Now, as the market starts moving higher into these upper resistance areas, 95, 98, and beyond are larger time frame resistance zones. So responsive sellers can still be active at 95, 98, and 01 to 03, and pretty much every resistance zone on the upside beyond 95 to 98. And at the same time, so far in the overnight session, we've seen the markets run on below average volume. So the volume is quite light, and if that theme continues into the day session, then that would also limit the range potential of the day. So if we continue to run on light volume, then even though the market can slowly make its way higher, it would be exhausting the range potential by 95, 98, and 01 to 03. In the event of a downside break below 78.5 to 80.5, we have the prior VPOC at 75, and at this point that also happens to be the high volume node of the developing balance area, so the one that we're building right now above yesterday's low and above the breakout area from a couple of days ago. That's really the HVN of that balance, just a reference point to be aware of, and a potential spot where buyers can still be active in the event that it's a failed breakdown attempt below the overnight range. And then the initial support zone is 66 quarter, 69 quarter. It's an area where responsive buyers can again be active and defend. And if the volume remains light, then again, 66 quarter, 69 quarter could be it. Or even if the market attempts a breakdown below initial support, it could be a failed breakdown attempt, again, because of that light volume environment. At the same time, the other thing to keep in mind is that we have the employment report due tomorrow, and that's a major catalyst, and the market could simply balance in a range ahead of that. So, heading into today, we know that the buy side can remain dominant above pre-market support, but at the same time, the upside potential could be limited to 95 to 98, and technically responsive sellers can even be active at 90 to 92, the initial resistance zone. We just have to be a little bit more careful at 90 to 92 because it's immediately above the overnight balance. So if the market's breaking out on decent momentum, then we'll have to be careful fading 90, 92 because it's counter to the immediate bias, which would be bullish, and at the same time the range isn't really exhausted and it would be immediately above the overnight range. So right now, heading into the open, the short-term bias is neutral bullish, and the idea is that buy side is dominant, but it is going to be running into some larger time frame resistance zones pretty soon here on the upside. And with non-farm due tomorrow, employment report due tomorrow, it's unlikely that we're going to break out or sustain a breakout above 95, 98 and 01 to 03. So that can really be the cap on the upside. And then on the downside, because the buyers are overall dominant and in control, we can just balance, and responsive buyers can be active at pretty much every zone on the way down. 66 quarter, 69 quarter, 62 quarter is a low volume node where buyers can be active, and in the event of some extreme selling, 56, 58 would be a range extreme, and another spot where responsive buyers can be active. But overall, the idea is that the market's bullish, so ideally it holds above 78.5 to 80.5, and we continue to balance and build value higher. But if we do break down, then initial support is still a spot where the buy side can defend. So those are the main ideas heading into the open. We're going to continue to favor the buy side above pre-market support. Be more careful on the short side because it is counter trend, and the only edge that sellers really have is key resistance or trade location. So, on the downside, unless we're getting high momentum, we just want to be very careful and aware of trade location on any shorts that are taken. And we can continue to still focus on longs at support. And then on the upside, 95, 98, 01, 03, those are spots where short setups have a higher probability of working out. So those are the main ideas. Let's see if the buy side can maintain control here of pre-market support. That area is really going to help set the tone right off the open, and we'll take it from there.